We do not have data on the number of Singapore retail users of FTX, just as for other platforms that are not licensed here and do not operate in Singapore. Unfortunately, those who invested in cryptocurrencies through FTX's global platform would have lost money. As for Singapore's broader financial system and economy, our assessment is that spillovers from the FTX collapse will be very limited. MAS's surveillance shows that key financial institutions in Singapore have insignificant exposures to cryptocurrency and crypto players. Going forward, MAS plans to introduce some basic investor protection measures for DPT service providers which are licensed in Singapore. MAS recently published a consultation paper which includes proposals that DPT service providers, amongst other things, administer a risk awareness test to evaluate if potential retail customers are suitable for accessing cryptocurrency services, segregate customers' assets from their own assets so as to prevent lending out of customers' money and protect customers' interests should the service provider fail, and refrain from operating a trading platform while simultaneously taking proprietary positions for their own account to prevent conflicts of interest. After receiving industry and public feedback, MAS will finalize the proposals and implement appropriate regulatory measures. Let me emphasize that even with these proposed measures, MAS will not be able to prevent DPT service providers from failing or customers from suffering losses. Cryptocurrency platforms can collapse due to fraud, unsustainable business models, or excessive risk-taking. FTX is not the first cryptocurrency platform to collapse, nor will it be the last. Further, even if a cryptocurrency platform is well managed, cryptocurrencies themselves, as I mentioned earlier, are highly volatile and have no intrinsic value. Those who trade in cryptocurrencies must be prepared to lose all their value. No amount of regulation can remove this risk. It is disappointing when there is a loss by our investment entities, as in the case of Temasik's investment in FTX. Even more so because the loss arose from what turned out to be a very badly managed company and from possible fraud and mishandling of customer funds. What happened with FTX, therefore, has not only caused financial loss to Temasek, but also reputational damage. Temasek recognizes this and has issued a comprehensive statement to explain its due diligence process and the circumstances leading to its investment in FTX. Temasek has also initiated an internal review by an independent team to study and improve its processes and to draw lessons for the future. I am confident that the Temasek board and management team will learn and improve from this experience. At the same time, we should see this FTX loss in the broader context of Temasek's performance in early-stage investments. After writing off the FTX investment, Temasek's early-stage portfolio, as at March this year, has generated an internal rate of return in the mid-teens over the last decade, better than industry averages. The FTX loss will also not impact the NIRC, as the NIRC is tied to the overall expected long-term returns of our investment entities and not to individual investments. Following the FTX collapse, some members have suggested implementing more guidelines and safeguards over the investments made by Temasek and GIC. That is understandable, but the governance structures in place today for Temasek and GIC are already more extensive than those of a typical company. One of the areas Temasek and GIC's private equity arm operate in is new technology and early-stage companies. There will always be new waves of innovation and technology that seek to disrupt the status quo. Some waves will turn out to be hype and fizzle out over time. Other technologies will prove revolutionary and transformational, like the internet. But even with genuinely revolutionary technology, there are risks. Many startups will fail, while a few will prove successful and grow into industry leaders like Tencent or BioNTech. The skill of venture capitalists lies in discerning the promising projects and backing them. Risk-taking is an essential part of such investments. As long-term investors, our investment entities have to operate in the space. They do their best due diligence based on the information available. Having made the investments, they monitor the investee companies closely, but no amount of due diligence and monitoring can eliminate the risk altogether. Sir, in conclusion, the FTX loss is disappointing and is being taken seriously. But the occurrence of investment losses does not in itself imply that the governance system is not working. Rather, this is the nature of investment and risk-taking. What is important is that our investment entities take lessons from each failure and success and continue to take well-judged risk in order to achieve good overall returns in the long term. In this way, we can continue to add to our national reserves and provide a stable income stream to fund government programs for a long time to come.